Investment 360, I'm Lindsay Williams in Cape Town. In the studio with me is a fund manager at Momentum Asset Management, and it's Shawn Stockigt. Mid and small caps are in focus tonight. We've spoken about this before on the show, Shawn, and I just wonder where the mid and small caps fit in the cycle, because at the moment obviously the market extremely elevated. Have the mid and small caps led the market or lagged the market? What's the situation?
No, I think that they're sort of late laggers, because once sort of everyone's extracted all the value out of the larger caps, and they start looking deeper and deeper for value and start approaching the small caps. So over late we have seen small caps selectively do relatively well, but just remember that the small cap sector is quite pregnant with the industrial sector. So obviously very linked to the domestic economy, and where that area has been relatively expensive from our point of view, and the resources cheaply, where it's quite underweight the resources.
Shawn, from my side, wearing as I am my Keep Calm and Carry On t-shirt, and I think given what's happened today, probably not a bad thing to do. Shawn, we've seen a number of smaller cap stocks like Argent, for instance, like the construction stocks that have been, very much hammered in the last, not just the last year, but the last few years, in fact. The environment that we're in at the moment is not conducive to positive sentiment there. What's your thoughts on that?
Yeah, I mean, you're quite right. I mean, since, I suppose, from this, after the World Cup, all those construction-linked and manufacturing stocks have been hit quite hard. Obviously for us, that creates opportunities. So we know that from the construction's perspective, for instance, that we need a catalyst in order for these stocks to re-rate. They might be cheap, but for how long they're going to remain cheap, we don't know. And we know that catalyst is probably an increase in public spending. And I think, this being an election year, we might hear a bit more on that front. But every year we hear at the budget that there's this massive amount of spend in the budget that's been approved, but it never seems to float through. But looking at those stocks from a valuation perspective, they're cheap, and one just has to, just wait for those catalysts to sort of unravel.
Shawn, when you talk about value in the market, everybody's ears pricks up because everyone's looking to make a quick buck out there. I don't know if there is the ability to make a quick buck in the market, but where are those key stocks? Where is the value? I need some names from you, sir.
Well, we know where the value is, but we don't know if it's a quick buck. It might, that value might become your short-term investments, might become your long-term investments. I think with value investing, it's very important that you have, obviously you have the capital to apply to the various areas, but also a lot of patience. But when the stocks re-rate, they can rate relatively quickly. I think we spoke on this program about a year back about Telkom and the pressures that Telkom was under. And it went, even from the levels that we thought was cheap, 15 Rand, it still went lower and then re-rated quite strongly. And that can come very, very quickly. But the thing is, where we're finding value, if we look at specifically in the resources sector, and which is difficult in the small cap because there are not that many. So our preferred pick in that area was Pallinghurst. And again, a stock that took a while before the markets identified that it wasn't just the two listed entities in Australia and the UK, but also consisted of the platinum interests, which the market wasn't applying any value to. And that has re-rated quite nicely, but we still think there's a little bit of value left in there.
Shawn, sorry about quick buck Bronwyn Nielsen up there, and the instant gratification that she always wants. So let's talk about more long-term things. What happened in 2013? What worked for you? You've got here Africa. You've spoken about Pallinghurst, and you say shoe finally. Adcock, Pick and Pay. You've been underweight the retailers. Tell us about your year.
Yeah, I mean, it was a difficult year for us because I think it was definitely a year where fundamentals went out of the window. If you just followed where the liquidity was going from the quantitative easing, which was floating through to eventually to the emerging markets, and you invested accordingly, you did quite well, and you just ignored fundamentals. You bought stocks at P's of double digits in the early 20s, even late 20s. So fundamentals didn't work, but we stuck to our knitting. We still managed to get a positive return above cash, which we were comfortable with. And some of the stocks that we thought might take a little bit longer came through. Obviously, Africa came through quickly because of the takeout option. And that, with seeing what's happening with current maize prices, is probably a good thing that we did receive that offer for Adcock, for Africa. And then obviously Adcock as well, which is currently under various negotiations to be taken out. But so for us, we just relied on the fundamentals. We didn't get caught up in those dizzy valuations that we saw, and it could carry on forever. But I think eventually fundamentals do prevail.
Shawn, just from my side, from experience, it's clear that with small, mid-cap and stocks that could sort of turn around, you require high conviction. And therefore, I would assume that in the way you look at these businesses, you have to have a keen understanding of the management, of the factors that are driving the fundamentals of those companies that you wish to be exposed to, but where value perhaps hasn't outed.
Oh, you're 100% right, Mark. And I suppose also, again, it comes to that patient aspect, because we know there's a clear small and mid-cap cycle. I mean, if you pull a graph, although the history is not there, if you pull a graph of the small cap index or a mid-cap index, there is a clear cycle. But the problem with it, with trying to time that cycle, you're probably going to get the entry wrong, and you or you get that right, you'll get the exit wrong. So for us, the best view is to look for cheap companies, hold them through the various cycles, and eventually they do come through. But it's key in this area, and I think it's key in investing in total, but more so in the small cap area, that shareholders' interests are aligned with management interests. If you don't have faith or confidence in management, the chances that they're going to unlock that value in this area are probably quite slim. So for us, you've got to back management. The numbers have to be there, but there also has to be some kind of story as well, which are backed by the numbers in the business. And if you buy the stocks cheaply and ride them through the cycle, you do relatively well.
Shawn, how would you be playing the retail theme in the small cap and mid cap arena right now with this latest move from the South African Reserve Bank?
Yes, well, I mean, we've been out of retailers other than the likes of Pick and Pay, because that's a value story in our sense because of distressed earnings. But the general retailers, we have with the clothing retailers, we've avoided them. Purely because if we looked at what valuations we're doing, they were just looking a little bit expensive. I mean, they're good businesses, and there'll come a time for us when to buy them. So we haven't been near the retailers, and with the current interest rates, I suppose it just favors us, because I think the retailers are probably quite correlated to an increase in interest rates. So not being there, it probably favors us, but we're not there because of our view on interest rates. We're there because of our view on we're not there because of our view on value.
What about what happened today? We had interest rates rising by 50 basis points from the South African Reserve Bank. We've had interest rates in other emerging market jurisdictions rising. Do you say to yourself, well, if interest rates rise, historically small and mid caps do something, so have you changed your policy? What is the relationship between interest rates rising and local domestic small and mid caps? Well,
yeah, I mean, obviously small caps are domestically orientated, but we don't look at it like that. I mean, we look at it purely at value, and we're prepared to hold through the cycles. This is an interest rate cycle. Interest rates go up and they go down, and we can't determine when that will happen. As interest rates went up today, and I think it caused most by surprise. So for us to try, it's far easier to look for the value and understand the business, and try not to buy businesses that have too much debt on the balance sheet that will be affected by interest rates. But I suppose, if one looks at the current, with interest rates rising, the sectors that will be heavily hit, as I said, retailers, and then probably the property sector as well, which is probably heavily correlated to the interest rate increase, because people are searching yield. So if they can get a yield with less risk by going into fixed income, they'll do that. And we haven't been in either of those sectors, purely because we thought property was expensive, and the same for retailers.
Shawn, Able, a stock that's been hammered, a rights issue under its belt, on a day where interest rates have edged up. Would it be fair to say that you would be positively disposed towards a stock like Able, and that possibly there's too much bad news in the price at the moment?
Well, that's exactly it. We look at Able and we say, what more negative news is in that share price? For a value investor, I suppose, if you don't have a stock that you've got to constantly justify, then you're probably not finding value. So just a year or 2 years was our Telkom, and now it's the Able in our portfolio. So we hold quite a lot of Able on the back of that rights issue, because we believe now the business is relatively well capitalized. It's about 5.5 billion rands worth of capital. We don't know if they'll need more. We think that the environment is stabilizing. Remember, Able is a business that has something like 2.5 million customers, of which 75% are repeat customers. And then they're still receiving about 200,000 applications a month. So the unsecured lending market it might be slowing, but it's not dead or going away. And a business like Able, who's been through a cycle like this, will survive. And the bigger banks will probably move away from unsecured lending, and the smaller players will move out of the market, and it will create a more competitive environment for those that survive. So we know there's a trading update coming out soon. We're not expecting anything drastic, but one never knows. But we think the environment now is stabilizing. And remember, they're also now collecting more than what they're lending out because of their stringent lending policy, which is not great for the longer term, but I think in the short term is what the business should be doing.
Shawn, you know me, I'm always after the stock, so I want one stock that you are most excited about.
Here we go.
There it is. Well, at this stage, it probably is able. Although the resources we have been we've been disposed to the gold companies by Harmony and Sibanye. But I would suggest our biggest conviction in the portfolio at this stage is through Pellinghurst and Able. So if one wants to see where we think there's value, then it's probably through those two.
Okay, Pellinghurst is one thing that's not on my screen at the moment, but Able down 4.6% today. It's in a bear market.
Oh, sure.
So are you adding at the moment? Are you adding at these levels? Where did it close? 10.55, 10.60?
Yeah, we're active buyers of Able. Obviously we don't know what's in that trading update. So, and also it's now breaching almost 6% of the portfolio. So one's also just got to take a little bit of risk into consideration as well. But we're avid buyers of Able throughout all our portfolios at Momentum Unconstrained.
Okay.
Mark, final question from your side?
Shawn, from your point of view, and it's nice to hear somebody who is convicted about small and mid caps, where they seem to be lost in this storm for the retailers and so forth in the last year or so. From a timing point of view, when do you see sentiment turning sort of positively to the extent that we can get that overall sort of momentum, not to use a pun, of course, with them across the board?
Well, that's a difficult question, Mark. I think there has been a lot more interest in the mid and small cap sector. We're definitely seeing that. I just go to the odd Investment Analyst Society presentation here in Cape Town, and a company like Ellie's, for example, which would probably have about 3 or 4 people in the past, now has a full room. So that does show there's more interest. And normally when you see that more interest, you start seeing, as people look deeper and deeper for value, you start seeing that momentum coming through. But remember, because these stocks are so liquid, one's got to take a view early and a long-term view on these companies. And unfortunately, a lot of investors don't do that, and they get in at the wrong time and they get out at the wrong time.